Welcome to the Benefits of Knowledge podcast with Lorne Curry of Curry Financial Group Limited. In this podcast, we are focused on helping businesses set up and manage their group benefit plan to protect and assist their most valuable assets. Join us on this journey where Lorne explores ways to help you develop effective and cost-efficient strategies for your business. Now, on to the show.
Hello and welcome to the Benefits of Knowledge with Lorne Curry. Today, Lorne has a special guest on the show, and that is Sofia Colaiacovo of Equitable Life. Sofia has 16 years of experience in the group benefit industry, working for Equitable Life of Canada. For the past 10 years, she has been in the role of group account executive, managing a block of small to mid-size employers across Canada and working in close partnership with group benefits advisors like Lorne and his team from Curry Financial Group. Lorne, good morning. How are you?
I'm doing great, Eric. How are you this morning?
I am doing fantastic. I'm very interested. Before we started recording, I heard a little story about Sofia and her family, and the last name got me a little bit. I had to ask for clarification a few times, and that was a clear indicator that I am not a big hockey watcher, apparently. Lorne, you called me out on that.
Yeah, well, we live and breathe hockey here in Ontario, right. And Sofia's a big Senators fan because she lives down in Ottawa, and as most people probably know, I'm a Leafs fan. So yep. It's the Battle of Ontario here.
But you get together for the real purpose of this podcast, right? We're not talking hockey. We don't have rivalries here. You guys actually work together for the benefit of many, many people up there.
Yes. We have worked together for, many, many years. We were just discussing that beforehand as well. So 10 years, Sofia's been the account executive. So I've worked with her the full 10 years there. And her in her experience previous to that, she would have been working on some of my client cases. So long relationship, and Sofia has been one of our biggest supporters when we need any help or guidance from insurance company points of view.
Fantastic. Well, Sofia, thank you so much for being on the show. What are you guys talking about today?
We are talking about communicating with your insurance carrier. We run into many questions here at the office that Joan has to handle. And we're just trying to make sure that our listeners, which hopefully lots of them are the HR managers, or small business owners that are dealing with the plan administration, they need to understand how important it is that we have this great line of communication open with the insurance companies. We've put together some of the things we run into here, and we're going to ask Sofia to give us the insurance company side of the point of view on this stuff. So welcome, Sofia. Thank you so much for taking the time out of your very busy schedule, I know, to join us today.
Thanks, Lorne. Happy to be here.
All right, that's great. So one of the number one questions I guess Joan gets from clients here is about maternity leave and how do they handle it? What determines what benefits can or should be extended, and how long? So there's lots of questions, and I know as we were discussing earlier before we come on, we are talking strictly, the point of view of Equitable Life's processes today. So that's where, Sofia's point of view is going to come from. So make sure if you're not dealing with Equitable Life that you confirm these, time periods and stuff like that with your provider. Okay. So Sofia, maternity.
Often you'll have plan members that will go on maternity or paternity leave, and they're entitled to the same benefits that they received when they were actively at work. And that also means in most cases, they're responsible for the same premium contributions that they were responsible for while they were actively at work. So whether it's long-term disability where they're paying 100% of the cost, or there's a split for the other benefits between the employer and employee, those arrangements typically will be continued while someone is on leave, whether it's maternity or paternity leave. Now, we always recommend or encourage plan members to maintain their benefits during leave for obvious reasons. Just because you go off on maternity or paternity leave doesn't mean you won't still need some prescriptions or go see the dentist, or other things could come up where you would need that coverage. But ultimately the choice is up to the plan member on which benefits they want to continue based on what's being offered to them. So if a plan member decides to forfeit some or all of the benefits that they currently have while actively at work, that should be provided to their employer, so an email or in writing, clearly indicating what their intentions are. So again, what benefits they want to continue or what benefits they want to opt out of while they're on leave. And then the plan sponsor or plan administrator can use that email to forward to their insurance company, along with their last date of work and the anticipated return to work date, depending on how long they're going off on leave, to notify the insurance company so that the appropriate notes can be made to their file. And if they are opting out of benefits, those benefits can be essentially put on hold while they're off on leave. And when the plan member returns to work, it is important to notify the insurance company within 31 days when they come back, especially if there's benefits that need to be reinstated, so that coverage can be reinstated without exception. We're going to talk about this a little bit later on, Lorne, but there is that 31-day window, which we'll elaborate on a little bit later. But if they come back and were not notified within that 31-day time period, that member could be treated as a late applicant, which means they'd be subject to evidence of insurability. And we don't want that when people are coming back to work.
Absolutely not. Right. Yeah. And like you said, we'll talk about a little bit further. So I'm sure most people know here in Ontario anyway, maternity or paternity leave can be 12 or up to 18 months now. So, but yeah, again, communicate. And I think I just want to really emphasize any benefits the employer were paying 100% of the premium for before someone goes on that leave, they have to continue to offer and pay for those benefits, correct?
Correct.
Okay. And then the other ones, anything the employer are paying towards, that's their choice. So if we just get employers saying, well, they don't want their benefits, and I just want to make sure they understand, well, they can waive or step back from the ones they're paying for. But if you as the employer are paying for anything, that has to continue because that's the law. Okay. So that's great. And maternity leave or paternity leave is just one of the reasons an employee might be away from work. We've got other things like we've got short-term illness. Now, some plans do have a short-term disability program. I would say most of them probably do not, especially in the smaller market. There's other leaves of absence for many, many reasons, right? So we get a lot of confusion with the plan administrators of when do they need to notify the insurer? Like how long does that leave have to be before they say, hey, this person is not active, they are on leave? Like a 2-week absence, I'm assuming, is not going to be considered, you'd have to make that communication.
Yeah. So if a plan member is going to be away for reasons other than vacation or, like you said, a short-term illness, which, I mean, it's hard to put an actual number of days on that, but, they're off for a couple of days or they're home with their kids sick, or it's, there is a clear indication that it's a minor illness and they're going to recover and be back to work very quickly. Those don't need to be communicated to the insurance company. It's when they're going to be off work for reasons other than vacation or short-term illness, where either it's due to an illness or an injury that is most likely going to lead to either a short-term or long-term disability claim, like you mentioned, Lorne, or just a simple leave of absence. So they're taking 3 months off for whatever reason. It's caring for family members, or I'm sure there's a lot of people during COVID that had to take some time because they had kids at home. So if that sort of arrangement is made where they're going to take a leave of absence, that needs to be communicated to the insurance company always. And again, similar to a maternity leave, it's usually just a notice with the employee's last day of work and their anticipated return to work date. And then for situations where it's not short-term or long-term disability, where they're potentially serving an elimination period to go on to claim, the employer has the ability to often extend benefits during that leave. And so it needs to be very clear to the insurance company which benefits they're extending and for how long. And so again, like you mentioned at the beginning, I'm going to speak to sort of Equitable Life's standard practices around a leave of absence, but it's important to check with your insurance company to validate what their rules are around extension of benefits. So for a true leave of absence, so the member is not sick, they haven't been hurt, they're not potentially satisfying that elimination period for a disability claim, the employer can choose to continue benefits during that leave, but it is important that they treat all plan members the same. So for Equitable Life, our standard when it's a leave of absence is that all benefits can be extended for up to 180 days, and that includes disability benefits if they offer them under their current plan. We also recently changed our policy to allow for a further extension up to 1 year just for life, health, and/or dental benefits. So the disability is a maximum of 180 days, whereas an employer does have the discretion to extend the life, health, and/or dental for up to a year. And that's without approval. So they can simply just send us an email and say, this plan member's last day of work is today, expected return to work date is this date, and we'd like to extend all benefits. And if it's 180 days, that's fine. If it's beyond that, then they have to just be clear that it's life, health, and dental only.
Wow, a year. I'm surprised. I didn't realize that you had taken it out quite that far.
Yeah, again, this was a recent change, and a lot of changes have happened over the last couple of years in terms of leaves of absence, temporary layoffs, simply because of COVID and a lot of people being off work for longer periods. And it was really just to eliminate the amount of administrative exceptions that needed to go through for approval. It was just delaying things. There was a lot of plan sponsors coming to us with a number of employees that were going on leaves and having to wait, the 3 to 5 days for an approval process beyond our standard, which used to be 180. And so we made the executive decision to extend that a little bit further so that we could get those changes processed without additional delay.
Okay. So the next thing I was thinking about, because sometimes there's confusion of, when people are off for a longer time, when does the plan administrator kind of pull the trigger to terminate that employee completely? And, how long is it before they have to get like a new certificate, or can they be reinstated? Would that be in that 12-month period then?
Yeah. So as long as somebody comes back onto the plan within 12 months or a year of their last day of work, we can reinstate coverage, meaning they can reinstate their old certificate number. If it's beyond the year, beyond 12 months, then we do treat them like a new hire. So they do have to go through the enrollment process again, whether it's completing a paper form or doing one of our online enrollment applications. The waiting period under the policy would apply to that individual. However, it would be up to the employer's discretion if they wanted to waive that waiting period for that individual.
Okay, great. All right, that's great. So basically a year is kind of that time period that we're looking at. So again, we get a lot of confusion around that. And so I think what we'll be doing is we'll be double checking with the other carriers that we deal with and see if they have a specific time period like you have at Equitable. So that's great.
Yeah, it's always good to check with the carrier first. You don't want to obviously offer something to a plan member that you're not sure the carrier is going to agree to. And the other thing I should emphasize too is in a leave of absence situation or extended leave under any circumstance, should the plan member return to work sooner than the expected return to work date or not at all, it's also very important that you communicate that to the insurer as well to ensure that either coverage is reinstated if they're back sooner or is terminated if you find out that they're not actually going to come back to work.
Yeah, because we run into those. We're going to actually talk about that again in a little while here as well. So you'd be surprised how long some people end up on plans. But anyway, okay, so that's if people are leaving and like leave of absence or illness or whatever. Then we have, we'll call it more unfortunate situations where maybe we're looking at a severance situation. And then now in that, we could have two different scenarios. We could have one with notice and one without notice. So can you give us some details on the severance side?
For sure. So for a severance with notice, the minimum extension of benefits is going to be based on the Employment Standard Act, which is basically number of years of service with that employer, and then up to a maximum of 8 weeks. And that includes all benefits that they would have had in force while they were actively at work, again on a premium paying basis, with the premium arrangements being the same as they were prior to them being severed. So again, if the employee was paying any portion of those benefits premiums, that would continue while they're on an extension of benefits. Now, for additional extensions of benefits beyond the ESA period, employers again do have the choice to continue life, health, and or dental up to 1 year from their last day of work. So that is without approval. So in our case at Equitable Life, you can send an email about an employee being severed, that all benefits are going to be extended for the ESA period, the Employment Standard Act period, but that you would also like benefits like life, health, and or dentals. Again, they have to specify which benefits, and those can be extended up to a year without special approval or exception.
Okay, now that's different as well, because in most situations, we are always told we have to get permission. I've never been turned down, but in most carrier situations, it's always we have to get that permission before they can put that in writing.
And again, our extension period for severance situations was also recently amended, and it really was to cut down the delays in the administration of those approvals, because often we do get requests for extension of benefits beyond the ESA period, and having to go through underwriting to get that approval, it often delays the process. And a lot of times, we get emails from plan sponsors that are about to communicate their decision for severance to an employee relatively quickly and need to know very, very immediately what they're able to provide in terms of an extension of benefits. And again, because we don't ever want an employer in a situation where they've offered something that when they in turn communicate to the insurance company says, well, no, we wouldn't be able to extend those benefits that long. To avoid those situations and to make it a little bit less of an administrative delay, we made that change recently to allow those extensions to up to a year.
Great, because I do know those situations usually happen very quickly. We usually get the call that they're either meeting with that employee this afternoon or tomorrow. It's like,
yep.
I don't have time.
Been there.
Yeah, right. So the one thing I just want to clarify here is long-term disability. It is available for the first 8-week period, up to 8 weeks?
Up to 8 weeks, again, depending on years of service. I believe you have 1 week per year of service within the notice period, up to a maximum of 8 weeks. After that, disability cannot be extended any further.
All right. I just want to make sure the plan administrators are very, very aware of that, because if they go offering it and it gets into an agreement, it's going to cost them a fortune, and they're going to have a really hard time finding someone that will offer that coverage. So that's something we stress all the time with our clients, is do not offer long-term disability. So All right. We just want to make sure that's really, really clear. Okay. I ran into a situation. Well, actually we did, because it was a client of both of ours. A few years ago, it was actually an accounting firm that had students that ended up coming to work for them, but those students were not from Canada. They were international students. And the instance I'm talking about, you probably remember, the employer was not aware for many months that the employee did not have OHIP coverage. Unfortunately, the employee did not read the group enrollment form that they signed, because it clearly asks if they are covered by OHIP. I don't know, maybe they didn't understand it. Maybe they just said, oh, I have to sign here, and they did not pay attention. Anyway, it put us in a bit of a situation. So I know Equitable Life offers some different programs than other carriers do. So again, we're just going to, say this is an Equitable Life scenario. So Sofia, maybe you can fill us in on what we can do or how to handle these folks that are not from Canada.
So it is pretty much industry standard that to be eligible to join a group benefits program, the employee and their eligible dependents need to have provincial coverage in place. And so the scenario you just explained, Lorne, there's a lot of employers that are hiring individuals who are new to Canada, who may be in the waiting period, have already applied for provincial coverage, but are in the waiting period. And so Equitable Life has a product called InPat Protect, which is essentially a product that fills the gap for employees and their eligible dependents who do not yet have that provincial coverage in place. So, for example, while they're in the waiting period, in Ontario, for example, it's typically 90 days. Now, it is intended to be temporary coverage. So our InPat Protect is intended to be for up to 90 days. And it will cover eligible expenses that would normally be reimbursed under a provincial plan. So things like physician services, hospital visits, emergency services like needing dental accident care or maybe an ambulance to a hospital. And again, this coverage, if an employer provides this level of coverage to an employee who's new to Canada and or their eligible dependents, it also allows them to add them to the traditional group benefits plan at the same time. So typically, without this InPat Protect product or a similar, provincial replacement program that some of the other carriers might offer as well, that member would not be eligible to join the group benefits program until they had that provincial coverage. So this allows them to join the plan right away, as long as you carry both products sort of at the same time.
I was thinking you had to do that. I guess if there's a 3-month waiting period on the program, that's going to coincide with that 90 days on that plan as well, right?
Right. I mean, assuming they've applied for the provincial coverage right away, like on their date of hire, if they're waiting 90 days for OHIP and they're waiting 90 days to join the plan, then in a perfect world, your provincial coverage becomes in force when you become eligible for the plan. And so a product like this is not necessary. It is not a standalone product that we offer. So it is, if you're going to offer InPat Protect to an employee, they're being put onto the traditional plan at the same time.
Okay. So the employer could always waive the waiting period in my scenario.
You got it.
They would have the Impact Plus and right onto the group plan. So then they're fully covered right away. So that's great.
Yeah.
Okay. All right. That one I'll say I had never run into that before. And then we actually ran into a second case in another location, totally different business. But we did run into a second one. So I was just thinking we wanted to add it today because I'm thinking maybe it's becoming a little more popular. My feeling is once COVID ends, because I think a lot of immigration has slowed right down here, but I suspect that is going to pick up. As soon as we get through, whenever we get through this COVID thing. So I think it's very important that people are aware of it because it took us by surprise the first time.
And we certainly introduced the product because we were getting an increased amount of requests for similar situations where we had employers that wanted to give coverage to employees that were coming to work for them because they were working full time and they were meeting all the other eligibility requirements as a full-time employee, and they wanted to extend the benefits program to them, but there was that gap. So we found a way to fill that gap.
That's great. That's one of the reasons we deal with Equitable Life all the time, right? Because they're forward-looking and they're out there to help everyone. So great stuff. Okay. We have people that we have LTD coverage, long-term disability, but we've run into situations where an employee goes on a WSIB claim, right? And then the plan administrator thought, well, they're getting paid by WSIB, so they don't need to apply for long-term disability because you can't collect both. So interesting. We know they should be applying for the LTD, so maybe you can give us all those reasons.
So again, I mean, similar to what we've said previously, anytime a plan member is going to be away from work on an extended leave, it's always beneficial to let your insurance company know whether or not it impacts their benefits or not. It's always good to have that open line of communication with your insurance company. Now, if the plan member is going off and it is likely that it will be a WSIB claim, that can be communicated to your insurance company. And you can ask whether or not an LTD application should be submitted at that point in time or at some point in the future. In most cases, I would think that it would be the answer that they'll get from their insurance company is that it's recommended that at least the application should be made the long-term disability application should be made to the insurance company. There's usually an employer portion that gets completed, obviously by the employer, just indicating last day of work, reason that they're off. And then there's also an employee portion. So we would recommend that both portions be submitted, even if they've already applied to WSIB or have been approved for WSIB. And the reason for that is there may be gaps in coverage where maybe WSIB only approves up to a certain amount of time. The member still is disabled and is not able to return to work. And so the claim may eventually switch to a long-term disability claim. Or they're in the process of applying to WSIB and the claim gets declined outright, in which case then it would be considered under the disability benefit with the employer's plan. And again, when someone is off dealing with an illness or an injury, this is obviously in most cases a very stressful time for the plan member, not to mention that they are on leave, so they're not receiving their regular income. And so anything that we can do and our plan sponsors can do to ensure that we are involved in a potential claim as soon as possible ensures that there's no delays in the actual assessment of the claim. And then ultimately, if the claim does come to, say, Equitable Life or another insurance company, and it's not a WSIB claim, we're not delaying the payment if it's approved as well. So the plan member isn't, off for an extended period of time without payments because they waited to let us know about a disability claim that may or may not even be eligible under WSIB.
Right. Yeah. Because you don't want to wait around for a month with no money.
Right. Yeah, absolutely.
Yeah. But then there's also a couple of other benefits of applying for the LTD on the waiver of premium.
So yeah, if you are off, if you meet the definition of disability under the under the employer's group benefits program, whether it's on their LTD or through WSIB, there is a waiver of premium application that's part of that process, which means that if approved, the premiums that plan member or the employer pays on their behalf for the life insurance benefits would be waived while they're on disability. And so it's important to get that process started as well with the current carrier so that those waivers are being put in force as quickly as possible.
Open communication. If you're not sure, then talk to us, right? Whether it's our office or whether it's directly with the insurance company. We've always got the phone numbers there that the plan administrator can call in direct. But if you're not sure, just make sure you reach out and ask. Nothing worse than making an assumption and then that assumption being incorrect. All right. So we start a new plan, or we get a new employee on, I should say. The enrollment form is given to the employee. They don't get it back, or they get it back. It gets set on, the plan administrator's desk, and somebody sets something on top of it. Next thing you know, we get a call. We forgot to send the enrollment form in, and now the employee is the late applicant, as we alluded to a little earlier. So, importance of making sure that these enrollment forms are in on time. What are the consequences if they are not?
So again, that general rule, pretty much an industry standard, is that when a plan member or an eligible dependent is eligible to join the plan, there's a 31-day window to get them enrolled. So for example, you have an employee hired December 1st. There's no waiting period under your policy. That means you have until December 31st to get that plan member enrolled, which includes them completing their application, whether it be a paper form or through an online enrollment process, and getting them onto the plan within that 31 days. Another example on the dependent side would be you have an existing employee already on the plan, gets married, or has a child. Their spouse would be eligible as of their date of marriage. So again, 31 days to get that spouse added to their plan from their date of marriage, or in the case of a new child, it's 31 days from their date of birth to get them onto the plan without being trapped as a late applicant. Now, the consequences of a late applicant mean that coverage is not guaranteed, and they're going to be subject to evidence of insurability. So there is what we call a statement of health. It's essentially a medical questionnaire that the employee and or their eligible dependents would need to complete. And then they'd be medically underwritten before coverage is approved. And in these situations, depending on their medical evidence or medical history, some or all of their coverage could be declined, meaning that regardless of them meeting the eligibility under the plan, because they were medically underwritten, they are declined for things like life or disability or health or everything. It really just depends on what is being provided in that questionnaire. And that can often cause a lot of grief for plan sponsors because, you have an employee who's not happy that they're not getting access to the group benefits program. You have an employer who's not happy that they weren't able to get their employee on in time. And be without coverage. Now, in some cases, it could be a decline with the ability to reapply in the future. So it may be that there's a condition that if it improves or if you have additional tests, we may reconsider that coverage. But there can also be outright declines where it's based on the medical evidence. It's just, unfortunately, the risk is just not acceptable to allow them to have coverage. Now, it's not necessarily all or nothing. You could get life and health coverage, but disability might get declined. And then typically the dental benefit, if there is a dental benefit on the plan, will always have a restriction in the first year. So for us, it's a $250 maximum per covered life for the first year. So regardless of medical history, regardless of what other benefits are approved or not, in that first year, you can only claim up to $250 for dental. And the premiums don't change. You're still paying the regular premiums. So we as part of when we onboard a new client, we have our client relationship specialists or group service reps that will offer plan administrator training. And often that involves getting them familiar with our online portal, but it almost always comes up just because we know it's something, it's probably, when it comes to administrative or special exceptions, it's probably the thing that we deal with the most is late applicants. So we are very, very clear with our plan administrators, experienced or not, to recommend that they do have a process in place to ensure that group benefits are part of their standard employment offer, which means, if you're taking the job or the position at our company, benefits are part of that. Here's the enrollment form, and it gets all sort of done as part of the sort of employee onboarding process, so that there is no chance of misses. That scenario you gave where I gave them a form and it's been, they sat on it for 4 weeks, or it was added to a pile on their desk and they didn't get around to it. Now, I will say that in some special exception situations where the employee did do everything in their part to apply for the coverage within that 31 days, so they got the forms, they did their paperwork, they signed it, they applied for coverage, and it was given to the plan administrator, and it sat on their desk and got buried by the millions of other things that they do in their day-to-day role. In those situations where, maybe they're a couple days late, they're a couple weeks late, and it's truly an administrative oversight, those situations should always be brought to the insurance company before the enrollment is submitted. So in our case, we would typically suggest that they reach out to their group service representative and sort of just outline the scenario. And in those situations, we will typically submit them for an exception. So we'll review the scenario, we'll review the circumstances for why the individual's late. And if it's clear that it was purely just an oversight from the administrator, often we will waive the late applicant status to avoid the plan member having to go through that process and potentially declined. Now, I should say that that's not necessarily approved every single time, and it really comes down to a case-by-case basis and the circumstances. But again, it happens for sure, and we do have some flexibility to consider those situations. Again, within a reasonable time frame. If it's months, sometimes even a year, which I'm sure you've had that come up, Lorne, where people get missed, or people, were given their forms and they just never sent them back. Those are very different situations. Those are often true late applicant situations, and it's often hard to overturn or to make exceptions to waive the late status in those scenarios. So it is very important to do your very best to get people on the plan within that 31-day window.
And just so our listeners really understand why is this so important, is because maybe that plan member, or new employee is not filling it out because they don't want to pay their part of the premiums. However, 3 months down the road, somebody gets sick, somebody needs a medication, and they say, oh, we should get on the group plan, right? This is why, it is this way. That's why there is the late applicants. It's very important. We recommend, as you just said, to our plan administrators, when you hire someone, you put them on the plan. The waiting period is still going to be served, and the people will not come on the plan. That's what some of the plan administrators seem to think. Well, if I enroll them and get them on the plan, they're going to go on right away. No. The system knows when they started and when they're eligible to start and when the waiting period's over. So do it early. Worst case scenario, if that person doesn't work out, you just have to remember to terminate the employee. That's much easier than it is trying to get somebody on at the last minute or have the scenario we just talked about. That brings up the last thing we have here is terminating employees from the plan. I have had people call our office and I forgot to terminate, John Doe. He's been gone for a year. I find it hard to believe, but anyway, I guess people are busy and these things get missed. But your recommendation as far as terminating employees?
Yeah, so if you have an employee that is terminating, whether it be a severance arrangement with or without notice, or an individual resigns, they need to be communicated to your insurance company as soon as possible. If anything, someone comes into your office, puts in their 2-week notice, your next step when they walk out of your office is let the insurance company know. Now, in most cases, plan administrators would have access online to most carriers' online portals and have the ability to process terminations on their own. So for situations where it's not a severance and there's not an extension of benefits, it's just simply the employee resigned. In most cases, specifically with Equitable Life, a plan administrator can go online and process that termination date, even if it's future dated. So someone comes into my office today and gives me their 2 weeks notice. I can go into the system and put a termination date that's 2 weeks from now, and it will hold that as a future date. It's done. I don't have to worry about it, and I can move on to the next thing. The problem with not communicating it as soon as possible, just like the scenario you just said, a million other things come up and you can't forget about it. And you're not alone, Lorne. We've had many situations where it's someone's left and it's been months or even a year, or in some cases even longer than that. And the drawback for the employer is that in most cases, insurance companies will have a maximum that they will provide in terms of premium credits. So at Equitable Life, our maximum is typically 3 months. So if you had somebody leave a year ago and didn't tell us, and you're telling us now, the maximum credit that you're going to get is 3 months, despite the fact that you've been paying premiums for the last year. Now, the other potential drawback is that, if we haven't been notified that there's a termination, we haven't been able to turn off the claims payments for that particular employee. And so if they do incur claims after their last date of work and happen to submit them, or even unknowingly, of course, if you go into a pharmacy or a dentist and they've got your information on file, sometimes that process is done automatically, right? It's not the employee that's submitting the claim. And as long as they're active on our system and those claims are eligible, those claims are going to get paid. So you could have a situation where there's claims hitting your plan and your experience well beyond the plan member's termination date. Now, in most cases, if there are claims incurred beyond the plan member's termination date, and we weren't notified right away, obviously, we will reach out to that plan member because they will be responsible to pay back those claims that were incurred. So we want to avoid those situations. We want to always avoid those situations, both for the employee to not have claims sent accidentally by their providers and then have someone coming back 3 months later saying that they have to pay those back, but also for the employer to make sure that they get their premium credits, because the way that we bill at Equitable Life is that we do prorate. So if you have somebody that terminates on the 15th of the month, you've already paid for that full month, you're going to get a credit for those 15 days or the balance of the month. We don't bill for full months. We bill down to the day that they were enrolled and or terminated. And again, with the maximum of 3 months, you want to make sure that we're notified ideally within those 3 months. I mean, ideally when it happens, but up to sort of the 3 months to ensure that you get the full credit back in terms of premiums.
And I think really the whole story on all of our conversation today has been, the idea is it's very important. The insurance companies do not know what's happening if we do not communicate with them, right? Better to err on the side of caution and ask if you're not sure, but make sure all of the information, if anything's happening with you or your employees, please contact us, contact your carrier directly, and make sure that that line of communication is open.
And that's why clients have advisors, right? And dedicated service teams within their carriers to be the experts when it comes to those things. So they don't have to be experts when it comes to enrollment processes and ESA's notice periods and extension of benefits. It's just, if you have a question, don't be afraid to ask, because it's always better to ask before, be proactive than reactive, as we've gone through all of these points, because there can be some pretty significant consequences of not having that open line of communication and asking those questions in advance. So,
well, boy, the time has flown by. I think we're right out to our maximum here. So as always, anytime I talk to Sofia, sometimes we go a little longer than we expect. Sofia, I can't thank you enough for sharing this information with our listeners. I certainly hope all those plan administrators out there have found this of interest. If they have any questions, concerns, whatever, please just reach out. Give me a call, 1-866-445-4424 is the phone number here. Of course, you can go to our website, curryfinancialgroup.com. Our emails are on there. Any questions, don't hesitate. Just let us know.
Thank you for listening to the Benefits of Knowledge podcast. Click the subscribe button below to be notified when new episodes become available.
The views expressed have been made specific to Equitable Life Insurance Company of Canada in the province of Ontario. Please check your local regulations as they differ from province to province.